Welcome back to Builders, Makers, Doers. I'm Andy Bassett. He's Elliot Bassett. Today, we're going to talk about resilience in a business. The theme question is, are you resilient or are you just insured?
Let's build off that.
Sweet.
Welcome back, everybody. Today, a little different setup.
Yeah.
Just you and me today, but
it's fun. I love it.
I'm excited. It's going to be fun. So we've got a fun topic. You kind of hit it in the intro. Talking about the difference between resiliency, being insured. Resiliency is a big word for you, Andy. You nailed that in the intro.
Did I get it all right?
I think so. Yeah.
Perfect. I had to Google it a few times.
Yeah. But I think there is a big difference, and we don't often talk about it in the when we're discussing risk with businesses. A lot of times it just gets centered around that insurance conversation. And so we thought it was worth spending time today to discuss the difference, because we bring that into our conversations with guests, obviously, but we don't use the terms, resiliency and things like that. So maybe open it up, talk about your thoughts around what's the difference between being resilient and being insured.
Yeah. Well, it's interesting you mentioned the guests, because I think as I think through the people we've had on here, a theme would be resilience, right? They've done things, they've taken risk, they're entrepreneurial, they're founders, resilience kind of comes along with that. And to me, like you said, it's a big word, but it really is, because resilience is about, how do we build a business that can roll with the punches? We get hit in the face and we can get back up, or we think long-term and, we've got goals, we've got a vision, we've got a plan, but along the way, things are going to happen. Yeah. Stuff's going to come up, and are we able to navigate through those and essentially survive? Right. And I think one of the problems, industry specific for, the risk management industry as a whole, is that everybody wants to bucket risk management into the insurance lens. And I think that's what we're trying to get people to shift their mind away from, is that, insurance doesn't necessarily create resilience, right? It reacts after something happens, maybe, it's not exactly like everything that happens in our business is insurable, or there's an insurance program or product that's going to respond. So I think, to answer the question you asked, when I think resilience, I think about, building something that lasts, something that survives, something that can navigate through the challenges that face us every day in business. And again, if we're narrow-minded, like our industry often is, to suggest or think that insurance is going to be the solution to create a resilient business, I think we're going to be quite surprised when things happen.
Well, that's exactly right. And thinking about it from the business owner's lens, we hear a lot, or when we start initial conversations, a lot of times it feels like that insurance conversation can be very reactive. When they started the business, bought the business or whatnot, they were told they had to buy certain insurance products. If you own a building or have property, you got to have property insurance. If you have a bank loan, if you're driving vehicles, you got to have auto insurance. Employees, you got to have work comp. So we're required to carry a lot of these insurances. And I think that it gets portrayed by advertisements and things, and even, insurance agencies and things, that it's all the same. Mm-hmm. And so, from a business owner's perspective, we hear, I should say, that, they just want to come in and quote and find the lowest price, et cetera. Right. But to your point, that's a very reactive approach, and insurance isn't designed to be that proactive measure that keeps the risk from happening. And so really what we try to have those conversations with is, from a business owner's lens, is you need to be the one that's having the conversations, that's understanding the risk in the business, and that can ultimately figure out what are all these different strategies, insurance being one of them, that you use to manage that risk to create a resilient business. And to your point, I loved how you said it's roll with the punches. Stuff's going to happen. Doesn't always mean insurance is the best solution when it does. A lot of times it's not. But making sure that you can be resilient. And we just did a webinar. You got me thinking when you were talking, where we shared a bunch of examples of, not very resilient businesses in some cases, and how they could have done that. So
Yeah, well, I think we'll talk about, some real life scenarios, because we talk all the time, and day to day at Ellerbrock-Norris, we talk about the 10 impact areas of risk, right? And insurance, which we've been talking a little bit about right now, is just one of those, but you think about safety, business exit planning, compliance, business continuity, your contracts and legal environment you're engaged in. I mean, the benefits and retaining people. I mean, the list goes on, and there's 10 of them. But I think also everybody that's listening to this, again, founders, entrepreneurs, dreamers, building businesses, have ideas, have vision. One of the things I think is really important when we talk about resilience and we talk about everything we're going to get into, these real life examples, these 10 impact areas of risk, is that people need to understand and identify not only internally who are the people on their team that can help them build the resilient business, because you're going to have different people wearing different hats and different roles, but also who are the outside partners and advisors that can navigate this journey with you, that actually understand your business. I think that's something that when we talk about resilience and we talk about, building a resilient business from a risk management foundation, I think we've got to acknowledge the fact that it takes a team in a lot of cases, specifically as you build a business. I mean, we talk a lot about on here. I think back on a lot of the guests we've had, businesses are built on the backs of founders early on. Yeah. Then we make that transition and we're like, oh my goodness, our head comes above the water. I'm like, wow, look what we've got. We have people,
you got a team,
assets, all this stuff. And that's, I think, the point at which when we start thinking about resilience in a business, who are the people that are going to help us get there, right? And, you think of those key relationships. People think of attorneys, they think of accountants, they think of, risk management professionals, safety professionals, IT and tech professionals. I mean, there's a wide array of people that are part of that. So I think that's one thing as we dive into this, is I want people to think about who on my team do I have that can navigate, and who's missing, right? Who are those people who are the people on my team that maybe don't really understand what I'm trying to achieve, and are they really helping me build a resilient business? So I think that's one thing that we oftentimes stress when we're talking about this, is we've got to get the collective team operating synergistically to achieve similar goals, rather than we often talk about operating in silos.
Yeah, I think that's spot on. And just to take that a step further, who's going to help you have these conversations? Because that's what we find a lot of times is it's just helping to facilitate the conversation rather than just, come in to sell a product or something, that's the role of the insurance broker. But who else is sitting there, helping you just work through these things to then help you make the decision on what the right insurance is for you? Because that's ultimately the business owner's decision. But at the end of the day, what we try to help people understand, or what I think business owners need to think of, is insurance is kind of that catastrophic protection, right? When the really bad thing happens, insurance should be there, or could be there to step in and help put you back in the position you were before. And so it's like one of the things that we kind of talk about is like, insurance doesn't keep your business running. It just helps you survive.
Yep.
And ultimately, that's how we want to look at it. Then we want to look at what are all the other things that help keep the business running smoothly to avoid, hopefully, having the insurance claim or whatnot. But again, oftentimes the insurance conversation has gotten like a maintenance policy, or, a maintenance thing, as it should. I'm paying this premium. It should pay me back at some point, And in reality, that's not the way to look at it. We should be using all these techniques that we can. And maybe it's building up a cash reserve so that you can have a higher deductible on your insurance so that it can manage the catastrophic claim. So I think about that a lot too. And how do we shift that perspective? But it all does go back to like, who's your team? And then not having this conversation in a silo, like you mentioned, is, I think, the first and foremost piece of that.
Well, yeah, exactly. And I don't remember what you said that just made me think of this, but I think while we are thinking,
it's probably something really smart,
very intellectual. While we're thinking about the insurance specifically, though, I do want to add this, because I don't want to hide from the fact that is a big piece of risk management. To your point, it's that catastrophic protection, but people get I don't like paying insurance premiums. You don't like paying insurance premiums, and nobody watching this likes to pay insurance premiums. We oftentimes feel like we're a victim of the market. We don't have control over the rising cost of insurance. And that's a reality. Like anything, insurance costs are not going to go down. Hate to break it to you, over time. But can we control them to a varying degree. Absolutely. And I think this conversation, the more we're thinking through resiliency in a business and building the foundation in these other 10 impact areas of risk to navigate, again, that resiliency in our business, a byproduct is absolutely going to be more control over insurance costs. You're going to be able to
point. Yeah.
What's that?
Sorry, that's a fantastic point.
Yeah. I mean, it's just people always think that they just don't have control. And, we'll talk, one of the examples we'll talk about here in a second has a very direct correlation to things like workers' compensation. There is, workers' compensation has a much clearer, return or control element when you talk about the mod and things, but people just don't really probably realize our industry, again, has done a poor job of helping people understand how this resiliency conversation can actually help you control insurance costs. So again,
why do you think that is? I kind of often wonder this. If you look at like how the company's insurance premiums are set, there's a lot of things that are out of their control. But there are a lot of things that are in their control. And at the end of the day, there's a human still, maybe not always, but there's a human still making that underwriting decision to a large degree. I mean, they plug it into a system that's going to give them various rates, but they have a lot of levers to pull. And so, I think about that quite a bit. Like, why is it, and maybe you just give your opinion, but like, why have we gotten to this point where business owners feel like their only control is to shop the market, which is ultimately, honestly, the worst strategy you could do.
Yep.
But within their control are many things they can do. Like, what, from a work comp perspective, what are you doing from a safety perspective? Are you managing employee injury? How are you telling that story to the insurance underwriter to make sure they understand all those things you're doing? Are you evaluating all the things you can do from a vehicle perspective to, lower the risk? Because ultimately, that's how an underwriter looks at it. How much do I think this client's going to cost me over time? And how much money do I need to get to be profitable on that account? That's basically the calculation in its simplest form. And so, why do you think we've gotten to that point where it's gotten so far away from having discussions about like business owners thinking that way, maybe?
Yeah. I mean, again, I think it's an industry issue for whatever reason. The people within our industry have just gotten very narrow focused on how do we control costs. And again, we go out and just shop programs and things of that nature. And I just think it's it's a narrow focus. It's a narrow lens to look through. And I think one of the things is, at the end of the day, insurance is what it is. It's pooling a risk, right? We all put dollars in and things happen. Dollars have to go out. Insurance companies are obviously going to, navigate actuarially to make a profit. But you hit the nail on the head is at the end of the day, while, insurance carriers are going to look at this at the global level. They're going to look at it across the United States where we're sitting today. They're going to look at it even at the state level. They're still going to look at it at the individual business level in the end to a degree where a human's going to underwrite. And I think the problem is we've gotten so like into this mindset that, again, the way people navigate it is, an underwriter's is looking at things in a box almost, right? It's like this manufacturer looks like this one, looks like that one, looks like the next. And that's not the case. We all know some of the people that have been on this show are running incredible businesses. How is that information? How is that being told, to an underwriter, to the insurance marketplace to leverage at the highest level? And I think the art in that has just gotten lost over time. And I think we got to get back to that.
Well, and I want to encourage the business owners. I mean, ultimately, it comes back to or can come back to your plate, and it's your choice on what coverage you buy, how you buy it, et cetera. But one of the things that we try to do is coach business owners on how you can take more control of that conversation, what you should be looking for. Ensure that if you're working with an insurance broker, that they're doing all the things that they should be doing. Don't just ship them the information and say, okay, let me know what I get back. Ask the right questions at the right time, understand how you can be leveraging your role as the client in this situation and with the underwriters and how you're telling that story, et cetera, so that, you don't just rely on the broker. You actually are taking a more active role in how your story is being told and making sure that all these things are adequate. And so again, I think that's almost like a byproduct of creating a resilient business, which is kind of cool because all these things should work together. And if you've created a business that in theory is going to last beyond you, beyond the next person, that's the resilient business, you're going to be getting the best insurance pricing, the best packages, and it works together. But again, insurance is one kind of component of that.
Yep.
And one of the things we wanted to discuss is real world scenarios of the difference there.
Well, exactly. And I think so diving into some of those, the one that'll be near and dear, obviously, to the audience that, we're talking to a lot of people in the trades, again, founders, builders, makers, stewards.
Little plug.
Yeah, there you go. Injuries to our team, right? So we think about all of us, probably have experienced this over time in our businesses. Maybe you haven't, hopefully you haven't, but if you do, thinking about when somebody gets injured on our watch in and out of the course of our employment, our duties, our job, that impacts so many things. So we talked about the 10 impact areas of risk, right? Somebody gets injured. What's that going to touch? Well, obviously it's going to touch insurance costs because we've got workers' compensation, which is absolutely directly related to injuries that we have in and out of our operations. So it's going to impact future costs of insurance. It obviously impacts, the safety and, impact area, which is like, what'd we miss? What weren't we doing? What could we be doing better? We think about things like, retaining people, benefits and retention, like the retention piece. If somebody's getting hurt or we're not operating a safe work environment or have a culture of safety, is it hard to attract and retain people?
Yeah.
You think about all these different elements of where it hits our business. Depending on the role of the person, people are very specialized in the audience we're talking to. And if one of those people is who gets injured, what's that mean for future work? Like, how do we get jobs done? How do we operate that piece of equipment? Do we have somebody that can do it? Are we going to be out of work?
How big of a bottleneck is that?
It's massive. So I think, getting our mind to think through, and then at the end of the day, a lot of our most important asset tool to our business is our people.
Yeah.
And I know builders, people that are founding businesses, they deeply care about the people that work for them because those are the people that allow them to achieve their goals and move things forward. And the last thing anybody wants is for that person to not go home the way they came to work, to their family, to the communities, to everything that they have that is a big foundation of why they come to work every day. So, you can't ever deny, the emotional piece of that. So I think, diving a little deeper into what it means when people get hurt at work, it touches a lot of areas.
100%. How many of our guests have we had on when we asked the biggest challenges in their business? I'm guessing it's 100% at this point that have said at least a part of it is people.
Yep.
Finding people, keeping people, driving culture, all the things that go into just people. And, again, there's a lot changing in the business environment right now with tech and AI and everything, but people are still the cornerstone of every business.
Yep.
And making sure that, particularly in the trades, they're not getting injured. We have a safe work environment. Because I love what you said. I think it's often overlooked in there or in that particular risk, the emotional side of it. We talk to business owners all the time that have had an employee death, God forbid, a major injury, and that stays with them.
Yep.
And it stays with their team. We had a client one time that had a major electrocution, and other of their team members, other their employees are literally watching their friend, their team member get electrocuted. And, that is emotional and that sticks with people. And so again, it goes beyond sometimes just the financial piece too, that I think is key, but we hear that all the time. And it leads into kind of, you mentioned it a little bit, but key person being the bottleneck, not necessarily getting injured, but the trades are a cutthroat business. Yep. And everybody's looking for talent. And, especially if you're trying to grow your business, you might have to go get somebody that's got the technical expertise or whatnot. So how do we keep and maintain good quality people when you can't always just pay them more? And, a lot of times I think that's the default answer is just increase their wage, which, you have to be competitive. But what are all the other things that we should be thinking about when it comes to key employee? Because that can be a major risk to a business too.
Yeah, well, absolutely.
Maybe one of the biggest ones.
Well, yeah. One could argue, again, one of the 10 impact areas of risk, key personnel planning. It's how many areas, you think, well, another one, business continuity, right?
Yeah.
So I'm rattling off impact areas of risk, but if we lose a very key person that does something in our trade that is very, skillful, like unique or takes a specific skill set, like how much are we losing future work? How much, and again, there's so much planning, I guess, that can go into, we can't avoid everything.
Yeah.
But so what I want to kind of get to in this is we're talking about, losing somebody that's key that can have an impact on the business in the future. Like, what do we do to actually keep that from happening? Because people are going to listen to this and like, well, how can I keep that? And what I think about, where my mind goes, and where I think a lot of, people in the trades think through is, man, our key people, you mentioned, they're probably well compensated, but we can't always chase a wage. But think about the training that goes into getting somebody up to speed in that. Maybe they came in with that skill set, but they're not. There's your way. There's nuances to how you run your business. So the training that goes into it, the time, the energy, the effort, the dollars, like the investment over time in these key people in our organization. I think we lose that sometimes as to what that is. And so again, how important is it to plan for that, right?
Yeah.
And how do we do that? I think a lot of business owners are like, well, what's it mean to have key personnel planning?
Well, I think that's exactly right. And it can be overwhelming, I think, from a business owner perspective. There are thousands of different strategies that any business can use to tackle any number of the different risks in your business. We always talk, and we don't need to get into today, but there's 5 key risk management techniques that some combination and of those should be used in your business for any of these risks that we're talking about. But I don't expect necessarily a business owner to know what all those are. And so one of the things that I've learned over the years, just as a business owner and leader, is, get a coach, get somebody that has done some of this before. That could be a mentor, could be somebody else in the industry, or it could be an outside, consultant coach that, you can pay, that's seen a lot of these businesses, and you can just have those conversations with. The best kind of quote I've always heard on this is, I think it's 10,000 hours to become an expert at something. But if I would pay a lot of money to get access to somebody else's 10,000 hours, right? If it's something I need. And so you don't have to be the expert. You just have to be able to, number one, have a process of identifying that these are areas in your business where you have exposure. And then 2, maybe that's something you have experience in, maybe not. And if it's not, try to find the right people that can come in and help you work through that have the right lens that will help you think through that particular area of risk. Because it's different. I mean, and we go back to all the time, but every business is different. I don't care if you're a plumbing contractor and a plumbing contractor. There are differences in the business that, you need to be thinking about, and it best as the business owner.
Well, I love that you went where you went with that, because I want to go back to what we talked about earlier and thinking through who are the people on our team that can help us navigate this either internally or externally. And I think the key personnel planning, that's just such a big thing to think about.
Yeah.
And so what I would advise anybody watching or listening to this is, first off, identify who they are, and then start to think about, how can I seek advice from people that have done this before or understand how to do it, and build plans within the culture of the organization to allow me to build plans to keep, there's a lot of things that you can do from a financial mechanism, between equity or non-equity stuff, but it's first and foremost, it's identifying it, it's building that plan, and it's building your culture around, having a place that my key people want to be part of now and long into the future. Right.
Yeah. I mean, it kind of comes down to almost the individual sometimes. We oftentimes want to make it a system, which we should in a lot of areas of our business. But when it comes to the people side, having the conversation with, what does this person care about? Doing their 5-year personal vision. I'm a big believer in that too. So each individual should know where they want to be in 5 years. And we as business leaders should be helping them go down that path and achieve what they want to achieve. And I think if you're doing that, you don't have a lot to worry about.
Mm-hmm.
It's a lot of times when the employee, the team member, doesn't know how you're helping them, doesn't understand, doesn't think that you have visibility into that, and you're just coming to work, and somebody comes and offers them, a little bit more money, and they're like, yeah, that sounds great. That'll help me get to my 5-year vision quicker. I think all those things kind of go into it, which is the importance of having the right conversations.
Totally agree.
But that's what really comes down to, again, when we're hitting a lot of ways that we look at being a resilient business. But we also wanted to talk through kind of, if you're looking at insurance as kind of the only risk management strategy, which is not accurate, but a lot of times it's the main one that gets discussed. there can be a lot of hidden costs, let's say, within that. Because if all we're doing is buying insurance, again, we've talked about a couple, but it's very reactive. And so a lot of times we're constantly fighting the fires on the front end, right? The same things keep happening because we haven't addressed the root cause. Employees keep getting injured. A lot of times we'll see when we start analyzing data, particularly on the work comp side, the experience mod, a lot of small injuries.
Mm-hmm.
And a lot of times those go overlooked. It's just, hey, we're in the trades. Like people are going to get, small cuts and whatnot. But those are leading indicators to eventually something bigger is going to happen.
Exactly.
And if we don't take those seriously, the big thing's going to happen. And I think that's where you're going to be. And you're constantly dealing with it. You have to do a report of injury. You have to figure out, do I need to send this guy in? Dealing with the work comp claim if it gets to that point, et cetera. And it's just constantly dealing with those things when in reality, let's figure out how we can drive a safer work environment so that those things aren't happening. And, oh, by the way, we're going to present or prevent the big thing from happening as well.
Yeah, I think it's really easy when we get in, like the example you're referencing now, when we get into the mindset of, oh my goodness, we're having, this pattern of stuff, and we get so focused on the fact that it's impacting, cost of insurance, which it's gonna, and we lose sight of the real cost, which could be much bigger, even if the big thing never happens.
Yeah, that's true.
But along the way, it's like, how inefficient are we at operating our business because we've got people getting hurt and somebody's filling in that doesn't know how to do said job as well? Or, what does the outside, what do our partners and subcontractors and people we've done work for, they see it. Mm-hmm. Are they likely to hire us again? There's so many costs that I think just get sort of swept under the rug in this conversation that, are big.
Yeah.
And it's like, you've got to sometimes sit back and identify what those things are. And people, again, they get so focused on, oh my goodness, what's it doing to my insurance costs and how do I handle that piece? Which again, it's a big part of it and sort of a result of, tackling the bigger issue, which is culturally we're missing something on how we navigate our organization safely, right? And the byproduct is going to be, we're going to control insurance costs as a result, but all these other big, massive costs that are just getting kind of unknown or forgotten, like if we can capture that, those are real dollars. But I want to talk about another example that I think highlights really well. And one of our insurance carrier partners shared this with us a while ago. I think this one,
exactly where you're going
this one just highlights so well reliance on insurance and forgetting the other impact areas of risk. And so this example it's a manufacturer that had a single location operation and was very well insured by the insurance carrier partners, a very good insurance company. So I would imagine the program was put together very well. Anyway, they have a fire, total loss. The insurance program, it's actually the insurance carrier uses it as one of their proudest claims handling moments, which they came in, the dollars were there. They rebuilt the facility. They were able to line up construction quick. All the equipment was replaced. All the things that needed to happen happened quickly. And, facility was rebuilt, equipment replaced, everything brand new within like 12-ish months. I mean, a quick time frame considering the size and scale of the loss. But there were a couple pieces when you talk about business continuity that weren't in place. Long story short, insurance worked perfectly. 12 to 18 months later, completely out of business. And why is that? They had a pretty high concentration of their product going to a single client, a couple different clients, a couple different buyers of their product. They had no plan to address what happens if we can't operate, we can't get that product to our key clients. They didn't have, it could have been really easy to set up relationships with competitors of theirs. Now, would it have cut margins at the time? Probably, but they'd have been able to get product to their clients and continue operating. So
those clients went and found other people.
Exactly. So what happened is this client, because they didn't have any of that planning in place, says, well, I don't know what's going to happen. I have no idea if their insurance program is going to respond the way it did. And so they ultimately went and sourced product elsewhere. So they lose a huge chunk of revenue between a couple clients. And then number two, that created a lot of uncertainty with some key people on their team who went and ultimately joined the competition that those clients had gone to. So they lose key clients and revenue. They lose key people, had no business continuity plan. Insurance worked perfectly, out of business within 18 months.
And that's such a good example of what we're talking about. The difference between a well-insured business and a resilient business. Yeah. And again, you can have one without the other, which is why the whole conversation needs to work together. And so it's just such a good example of it. The flip side I kind of wanted to hit on too is, as business owners, you're trying to build a business that increases in value over time. And if you talk to any folks that do business valuations, exit planning, things like that, one of the best ways to increase your business value is actually to de-risk your business.
Yep.
And that makes sense when you think about it. If somebody's going to buy your business, similar to how we were talking about an underwriter pricing your insurance, is the lower the risk to them, the more they're willing to pay you for that business. And that's, again, across all these areas that we're talking about. But I think, we've talked a lot about the things that can happen negatively if we're not a resilient business. But I also think the positive is a big increase, frankly, in the value of the business. If they know key people are locked up, that can be a massive one. If they're worried about key people and institutional knowledge leaving when the founder or the owner sells, that can be huge. Key clients and relationships, are those going to stay in place? So the more that you can de-risk those, make your business more resilient, the better off and the higher the value is going to be in the market.
Yeah, it's I'm glad you brought that up, because that is something that absolutely gets lost. Matter of fact, My Business, My Life, My Future, the book was written on that exact concept. Right? What it is.
That one in.
It's maximizing value by minimizing risk, right? And I think just 100%. A great lens that everybody listening to this and watching this should think through is, how do I flip that mindset that if I can actually de-risk my business, I'm increasing or maximizing the value of the business. Like it shifts you from all of these risk management strategies, whether they're insurance or otherwise, are just expenses.
Yeah.
As opposed to strategies that are helping me increase value.
Potentially an asset. Almost,
100%. Yeah. And I just think people very easily lose that mindset. And again, I blame a lot our industry on, forgetting or not even realizing that's a big piece of what risk management strategies can help us achieve.
Yeah, totally. And it is kind of funny when you think about it through that lens, because that's literally the first thing that any, business valuation or exit planner is going to tell you is, first thing we got to do is make sure we address the risk in the business.
Yeah. I mean, think about it. If you're looking to buy a business, you kind of want to understand risk, right?
100%. I mean, are you going to buy it and it's going to go out of business in 6 months? Absolutely. That's a big deal. And so, we've talked a lot about what does it mean to be resilient versus insured, et cetera. But if there's a business owner listening to this, like, what would you tell them to be? How can they take the next step in thinking through this? We've talked about a lot of things, but how do you sum that up?
Yeah, I mean, I think I'll go back to what I said earlier. It tap into the resources you have internally and externally as a business owner to think through these yourself. It gets daunting, right? You're like, at the end of the day, I need to go out and I need to run my business. Yeah. I've got to, whatever it is we're doing, I got to build this, I got to make that. And so we get that. Right. And so I think first and foremost is, if you listen to this and it's resonating, start to have these conversations internally with the key leaders on your team, and then reach out to those external partners you trust or somebody like us to start navigating the conversation. The third party relationships are so valuable because they allow you that lens that's outside your four walls, if you will, outside of the day-to-day grind that you're doing. Good advisors have seen a lot of different things. We've seen things that have gone well. We've seen things that haven't worked so well. Oh, and by the way, a lot of us are our own. We own our own business, so we've navigated a lot of these things. And so I think first and foremost, that's what I would advise, is start having the conversations. Start with it internally and extend that to external partners you trust. And if you don't have those partners, seek them out. Yeah,
I think that's fantastic advice. The only other thing I would add after that is work to create systems in your business around this stuff. No different than you would if you're a manufacturer. You have systems and workflows for how does raw material get to end finished product. Same thing when it comes to risk management and building a resilient business. Think about it from a systems mentality. What are you doing every year? What are you doing every quarter? How are you evaluating when you hire somebody new? What's the system you're going to go through to evaluate the risk associated with how key that person is, or whatever it be? Try to think through, how you're going to create the systems that force you to, or allow you to have the conversations. That's ultimately what it comes down to, at the right times, to make sure, you're able to make the right decisions as a business owner. And if you can do that, I think, again, you're going to figure out where insurance fits in this whole piece, and where protecting your business honestly comes in. And so I think with that, that's a pretty good way to close up, but I hope everybody kind of takes these things and thinks through them and applies them to your business, because every business is different, and you're going to look at things differently. You have a different risk profile, a different aversion to risk than most, or than other people, other business owners. And so think through that, and then get the right people in place to help you do it.
I think it's a great question to ask ourselves. Are we building a resilient business?
Exactly.
If not, what do we got to do to make sure that's happening?
Bingo.
Love it.
All right. Well, we'll see everybody next week. Thank you.